Hi there, good morning. You're watching Market Cafe with me, Snehi Shah on ET Now. Now, let's talk about how the markets did yesterday. While our Indian markets closed almost 1% higher, let's take a look globally and see what the US markets did yesterday. Now, the three major averages closed lower for the fourth consecutive day. The S&P 500 lost 0.7%, while the Nasdaq Composite dropped almost 0.5%. The Dow lost 286.5 points or 0.8%, and investors received a fresh slate of corporate earnings, including Apple after Thursday's close. The tech giant posted beats on both the top line and the bottom line for the fiscal second quarter, propelled by iPhone sales. Apple shares gained more than 1% in extended trading, and along with that, you had shares of PacWest that tanked by more than 50% after news of a possible sale. And Western Alliance shares lost almost 35% on banking worries. You also had Qualcomm shares that fell 7% on weak guidance, and Apple was the one that was getting all the highlight. And Federal Reserve's next senior loan officer opinion survey is scheduled to be released on the 8th of May. Jobless claims have totaled to 242,000 for the week ended April 29, which is higher than the estimated 236,000. April's non-farm payroll report and unemployment rate is due today, and the averages are also tracking for a week of losses, which happens to be the worst performance for all three since the 10th of March. The S&P 500 is off 2.6%, while the Nasdaq is down 2.1%. The Dow itself also is down 2.8%, but also let's take a look at what's happening in Europe. Now, the European stock markets closed lower on Thursday as investors digested the latest rate hikes by the US Federal Reserve and European Central Bank. The Stock 600 index slightly trimmed earlier, and they trimmed losses earlier to end the session down 0.4%. And this comes in after the ECB confirmed a widely expected 25 basis points interest rate hike. Media stocks on the European Stock Exchange closed down 2.7%, and basic resources were 1.8% lower as the majority of the sectors ended the session in negative territory. Utility and food and beverages stocks were among the few sectors to close in the positive territory, ending 1.1% and 0.6% up respectively. But now let's move away from the markets and look at what commodities are doing. And oil prices have settled nearly unchanged on Thursday after the European Central Bank decided to slow the pace of interest rate hikes, with prices still down more than 9% for the week on demand concerns in major consuming countries. Brent futures settled up 0.2% to $72.5 a barrel, and WTI crude settled down 4 cents at $68.5 per barrel, and WTI in early trading on Thursday fell to a session low of $63 a barrel, which is the lowest price since December 2021. Now, oil prices tumbled this week after concerns about the US economy and signs of weak manufacturing growth in the world's largest oil importer, which happens to be China, slid further after the US Fed Reserve raised interest rates on Wednesday. That capped near-term economic growth prospects, but however, the Fed signaled that it may pause further interest rate hikes to give official time to assess the fallout from recent banking failures and to gain clarity on the dispute over raising the US debt ceiling help support the markets. Also, now let's take a look at all the cues that you should be watching out for today. Let's look at globally. Eurozone retail sales numbers will be out today. US unemployment rate numbers should be out later today, and US non-farm payrolls along with China Caixin Composite and China Services PMI will be out. Now, as part of global earnings, you've got Adidas and you've got Clarion declaring numbers today. On Dalal Street, you've got among the Nifty pack, you've got Britannia Industries, and among the non-Nifty pack, you've got a slew of earnings today like Federal Bank, Equitas Small Finance Bank, Alembic Pharma, Paytm, Adani Power, Piramal Enterprises and Bharat Forge. When it comes to corporate action, you've got DCB Bank, which is going to consider fundraising or capital raising today. Also joining me on the show today is my co-anchor Harsh Saita. Hi Harsh, good morning.
Hi, good morning Snehi. Debuting today together, so for the first time.
Feels great.
Yes, absolutely. Let's quickly move on though. And after the Federal Reserve spoke about what they believe is the outlook for the US economy going forward, we also had the ECB, which raised its interest rates by 25 basis points, and now interest rates in Europe are at 3.25%, and this takes the combined rate hike to 3.75% or 375 bips since July of 2022, all in an attempt to tackle inflation. Further action is still likely, mounting wage and price pressures which continue in Europe. But at the same time, this is a slowdown after 3 consecutive 50 bips rate hikes, and this on the back of the biggest drop in loan demand in the Eurozone, according to the latest banking data. The central bank did not provide any guidance for upcoming meets, but let's listen in to what Christine Lagarde, the president of the ECB, had to say.
As the energy crisis fades, governments should roll back the related support measures promptly and in a concerted manner to avoid driving up medium-term inflationary pressures, which would call for a stronger monetary policy response. Fiscal policies should be oriented towards making our economy more productive and gradually bringing down high public debt. Policies to enhance the euro area's supply capacity, especially in the energy sector, can also help reduce price pressures in the medium term. In this regard, we welcome the publication of the European Commission's legislative proposals for the reform of the EU's economic governance framework, which should be concluded soon. According to Eurostat's flash estimate, inflation was at 7% in April, after having dropped from 8.5% in February down to 6.9% in March. While base effects led to some increase in energy price inflation from minus 0.9% in March to plus 2.5% in April, the rate stands far below those recorded after the start of Russia's war against Ukraine. Food price inflation remains elevated, however, standing at 13.6% in April after 15.5% in March. Price pressures remain strong. Inflation, excluding energy and food, was 5.6% in April, having edged down slightly compared with March to return to its February level.
All right, so that was the word coming in from Christine Lagarde, president of the ECB. But let's also look at other things that are making news globally. And Apple's first quarter results topped estimates, largely led by stronger than expected iPhone sales. iPhone revenue, which makes up for more than half of the total revenue, rose to $51.3 billion versus estimates of $48.8 billion. The tech giant also boosted its dividend and announced a $90 billion share buyback program.
Right, and let's move over from one phone maker to another. Samsung, an influential workers' union at the South Korean electronics maker, warns that members could walk out over wage disputes. This could be the first ever strike in the company's history. The National Samsung Electronics Union claims that the management has cut the union out of wage negotiations.
And the latest on the banking crisis. Reports suggest that UBS is reviewing plans to sell the Swiss banking business of Credit Suisse in an IPO after taking over its smaller rival. The plan includes potentially keeping the unit's investment banking operations while selling the rest. The plan is still at its nascent stages as UBS continues to focus on the takeover.
Right, and switching over to tech. US President Joe Biden met with top AI players, Microsoft and Google. The key agenda of the meeting was to ensure that AI products are safe before they are deployed. Biden told officials they must mitigate current and potential risks AI poses to individuals, society, and national security. The meet included a frank and constructive discussion on the need for more transparency with policymakers.
And joining the many companies axing jobs, Swedish car maker Volvo has said it will eliminate as many as 1,300 roles as the company ramps up cost-cutting measures. Management flags economic headwinds, increased raw material prices, and increased competition as areas of challenge for the industry.
Right, with that we'll slip into a very short break. We'll go domestic on the other side. Stay tuned.
Welcome back. Thanks for staying tuned to ET Now. But let's move on with more news and updates. And after the setback for Go First, airfares are on the rise this summer, up as much as 18% in some cases. So let's go across to my colleague Bhavya, who is getting us more details on how these soaring prices are impacting the industry as a whole.
The Go First crisis is the talk of the town. But how does it exactly impact you? The suspension of flights and routes by the Go First airline has led to a surge in the prices across different airlines. Let's look at the top 10 routes where ticket prices of May 5, that is tomorrow, have surged by more than rupees 10,000 as compared to the usual prices. Number 1. The route from Delhi to Leh, which is usually cost at more than 4,700, has increased to more than 26,000. Srinagar to Chandigarh, which is approximately 4,700, has again increased to more than 26,000. Chandigarh to Srinagar, again, which is approximately around 4,000, has increased to more than 24,000. Leh to Delhi, which is approximately around 8,500, has been surged to more than 25,000. Srinagar to Delhi, which is somewhere approximately 4,500, has reached 17,700. Delhi to Srinagar, which again lies in the bracket of 4,000, is now more than 15,000. Delhi to Patna, which is somewhere around 3,500, is now more than 14,000. Mumbai to Lucknow, which is again around 4,000, is now more than 14,500. Mumbai to Chandigarh, the prices of which are approximately around 5,000, are now more than 15,000. Delhi to Bagdogra, which is again around 4,200, is now more than 13,500. Apart from these top 10 routes, the two most busiest and most common routes of India, which is Delhi to Mumbai and Mumbai to Delhi, have increased from approximately 4,000 to more than 13,000 for May 5, that is tomorrow. Flights to Dubai have also seen a surge of more than rupees 5,000. So amidst all of this, to minimize the trouble caused to the passengers, DGCA has ordered Go First to process the refunds to all the passengers for all the suspended flights.
Right, thanks for that. Let's quickly move on. Let's now hear out views from experts on what they make of the impact of the Go First crisis.
The airline has had losses in excess of $100 million. The 900 crore loss in FY22 increased to 1,800, and we estimate the loss this year will be between 2,100 and 2,300 crores. Your reporter told us about the dues to the bank, which is 6,500 crores. In addition, there's 1,200 crores due to vendors and 2,500 crores due to leasing companies. Now, these things don't happen overnight. This has been building up over a period of time. And I disagree that you cannot solely pin this on engines, because other airlines are flying a similar fleet with similar engines, similar routes. Go has not spoken about alternate capacity plans.
I mean, they've committed to 300 crores of refund, but that's their commitment. We really don't know what the real refund figures are going to be like. And I think it's absolutely right. First of all, the DGC has got no business to be regulating the price of ticket, because expenditure and operating cost is an airline purview and domain, and it's based on supply and demand. So if the DGC is going to put a low cap and a high cap, then the DGC should also put a minimum revenue guarantee for airlines, because when the price of fuel goes up and when things turn south, the airlines take a walloping impact. Even now, a single flight is overburdened by 15,000 rupees because of an Udan surcharge.
Okay, so that's the word coming in from experts on the Go First crisis. But in more developments on Go First, operational creditors are looking to submit a different petition to seek insolvency of the company. My colleague Ankur joins in with exclusive details. Hi, Ankur.
Yes, in an interesting turn of development, what we have learned is that the operational creditors are moving NCLT with a separate petition. Remember, there's already a petition which was moved by Go First themselves for initiating insolvency proceedings and granting moratorium, on which the court has not passed the order yet. In fact, the order is reserved after the hearings which happened on Thursday. Now it will be interesting that why operational creditors are moving a separate petition. As per section 9 of IBC, any of the operational creditors which has not recovered the dues earlier by the different means can move a separate petition at tribunal, and after that insolvency proceedings can be initiated against that company. Now, as far as the names of these operational creditors are concerned, these are SS Associate Service, Air Castle Island. All these operational creditors have already decided that they will move a petition on Monday. That is when the court opens, because on Friday the court is closed on account of holiday. As far as the total debt of operational creditors is concerned, it is around rupees 3,800 crore, and overall the company owes around 11,000 crore, which includes 6,521 crore from financial creditors.
Right, thanks for that, Ankur. Let's switch from airlines to auto. Two-wheeler manufacturer Hero Motor declared its results on Thursday, and the numbers beat street estimates, and they reported a 35% year-on-year jump in its March quarter net profit. This was significantly higher than the estimates. Let's go across to Srishti, who's standing by and who tracks the sector to understand the numbers.
For Hero MotoCorp this time around, it was a great set, I would say, because this time around, although the revenues were in line to what we were expecting at ET now, the company saw 8,307 crores coming in for their top line. But other than that, a beat coming in on all the other three benchmark numbers from the likes of EBITDA, margin, as well as profit figure, way above than what we were expecting. For EBITDA, we have seen a jump of 17.2% on a quarter-on-quarter basis. Look at the margins. We were expecting the number at 12.2%. The company has outperformed the expectation. 13% margin is what the company has reported for now, and exceeding that 12.2% mark we are seeing happening after 5 straight quarters. So a great performance onto the margin front, wherein the factors leading to such a sharp uptake onto the margin front, the company says that this is driven by the lower commodity cost, higher savings, because previously we have seen the company announcing for a VRS, so maybe that's one of the factors, and judicious price increase is the other third highlight coming in for the margin outperformance. Onto the profit figure, an outperformance there as well, almost 21% of uptake on a sequential basis onto the profit figure of the company. 859 crores is the number. And if we look at the management commentary, they do highlight that going ahead their focus is on to the new product launches, with a special focus onto the premium segments. They are reiterating this particular fact. They are happy about the margin expansion, and they do expect the two-wheeler volumes to pick up going ahead for the industry. They do expect a double-digit growth for this particular financial year, but do remember that this will be on a low base, because the two-wheeler industry is still very far from its highest levels of sale back in FY19. So that's the update coming in on Hero MotoCorp, but definitely a good set of numbers being reported, especially onto the margin front. Okay, Shrishti, thanks a lot for that. But let's also see what brokerages are maintaining when it comes to the stock. And two brokerage notes have come out on Hero MotoCorp. You've got JP Morgan as well as Macquarie. So let's start with JP Morgan first. And this brokerage house is maintaining their overweight stance with a target of 3,050 rupees for the share, which is quite an upside to the current market price. And they say that strong operational results were driven by lower raw material costs for the quarter gone by, and there were no negative surprises in the results. They also expect upward revisions to consensus estimates, and they say that watch out for the commentary on the volume outlook. Now, when it comes to Macquarie, Macquarie is maintaining a neutral stance with a target of 2,640 rupees on the stock, and they say that increased competition poses earnings risk to the stock.
Well, we'll stick to earnings. TVS too reported a jump in its revenue for the previous quarter, crossing the 6,000 crore mark. Net income too increased almost 50% on a year-on-year basis. The two-wheeler maker saw a slight increase in its margin as well at 10.3%. The other company which declared numbers was HDFC Limited. HDFC reported Q4 numbers which beat analyst expectations, with provisions coming slightly higher than expected. My colleague Vamakshi Doria is here to break down the details of that one.
Well, a strong set of numbers is what HDFC has reported this time around. Now, NII and BAT is much stronger than what we were expecting, but the provisions we were expecting it to decline, but they have come in higher on a sequential basis. AUM growth is more or less in line with what we were expecting. Now, let's look at the numbers in a little more detail. Net interest income stands at 5,321 crores versus our expectations of around 5,000 crores, registering a growth of nearly 16% when we look at it on a year-on-year basis. PAT has come in at 4,425 crores, an uptick of almost 20% on a year-on-year basis, and this is also much higher than what we were expecting. The provisions were expected to come in at 360 crores. They've come in higher at around 438 crores, rising on a sequential basis. AUM stands at 7.2 lakh crore. Now, this is an uptick of almost 11% on a year-on-year basis. Now, let's look at that AUM growth number. Now, on an AUM basis, the growth in the individual loan book was around 17%. Let's talk about NIMs. NIMs have improved on a sequential basis from 3.5% to 3.6%, an improvement of around 10 basis points. Along with this, we are also seeing that the asset quality has also improved for the counter. Gross NPLs have reduced from 1.49% to around 1.18% on a sequential basis. Apart from that, the board has also declared an interim dividend of 44 per equity share as far as that goes. Now, we also have a few comments that have come from the management in the press release, and they're highlighting that the inherent demand for home loan continues to be quite strong. Growth in home loans was seen predominantly in the mid-income segment as well as the high-end properties. In March 2023, in fact, the company recorded its highest ever monthly individual disbursements. So largely that was the result for HDFC Limited. As of now, the numbers look much stronger than what we were expecting.
Okay, Vamakshi, thanks a lot for that recap on HDFC's Q4 numbers. But let's also see what Macquarie has come out with and what their view is on the stock post its results. They're maintaining an outperform stance with a target of 3,060 rupees. They say that the quarter gone by was a stable one, but all their focus is now on the merger. And moving towards long-dated bonds, they're saying that the company is also running down their wholesale deposits, and they say that the expected date of the merger is likely to be around July 2023.
Right, let's move on. It's a steady Q4 for Tata Power, and the company has managed to beat street expectations. Renewable and coal business boosted profitability. Let's listen into what the management had to say on this one.
All are aware, India's power demand continues to be very robust. In fact, the power demand grew by nearly 7% in Q4 and more than 9% in the whole year of FY23. Thermal generation also increased by nearly 8%, and renewable generation went up by 18% compared to the previous year. Under the Section 11, the context in which it is done is that you will get whatever is the actual cost that you incur on generating power, which includes the cost of coal as well as the operational cost. So it's basically a cost reimbursement mechanism which is there under Section 11. So that's how is the Section 11 where there would be no under recovery. As far as the under recovery post that, that's where the discussion is going on to see that how we come to an arrangement which becomes viable for everyone. And why do I say this is because Mundra is one of the most cost efficient plants. It's one of the best in terms of the operating parameters, and the way the structuring has been done on a merit order, it will be very, very attractive for the procurer. And hence, it will make business sense for the procurers to buy coal from Mundra rather than buy more expensive coal from other procurers, from other generators. So I think it's a very good arrangement, good for the consumer, good for the DISCOM, and good for the generators.
Alright, so moving on from Tata Power to FMCG major Dabur now, whose Q4 results were below what the street was expecting. The company saw growth in its financial on a sequential basis, however. My colleague Winnie is standing by to give us more details on this. Hi Winnie, good morning.
Good morning. And in terms of Dabur's numbers, what we saw coming in, revenue came in line, but the profits and margins were a miss for the company. Profit mainly was seeing a decline because there was a one-off coming in, as well as some amortization of 22 crores from the Badshah Masala acquisition. This is the first quarter where, there's a complete, after the acquisition, we're seeing Badshah Masala getting integrated. Other than that, the health supplement business saw a decline given there was a high base last time as well. Food and beverages maintained to see a strong growth as well. Company did highlight that the consumers have actually been downtrading, going more towards the affordable packs. They're quite price sensitive as well, and there's a demand slowdown that is more acute and more accentuated in the rural markets, which has led to a negative mix for the company. Also, apart from that, when you look at what the brokerages and analysts have actually done as well, post the earnings have come in, we're seeing a cut in the target price coming in for most of the analysts, as well as cut in EPS as well. Let's just look at in terms of what brokerages are specifically saying. Investec on Dabur is maintaining a hold. They've cut the target price to 542 rupees from previously 584 rupees. India volumes declined after 10 quarters is what they're specifically highlighting, and obviously they've sharply cut the estimates by 5 to 8% for FY23 to FY25, and do not rule out another round of earnings cut coming in as well. Macquarie too has maintained a neutral rating, cut the target price for Dabur, and given the new target price at 545 rupees from previously 560 rupees. Near-term headwinds are there, and that is why that is driving the EPS cut as well. They've cut the FY24 estimate and FY25 estimate for the EPS by 7 and 3% consecutively. They see a near-term challenge coming in terms of specifically the margins of the company. Jefferies too has cut the target price to 545 rupees from previously 640 rupees, trimmed the EPS estimate by 8 to 9% as well, and downgraded the stock to a hold as well. And also in terms of Morgan Stanley, they're maintaining the overweight rating, but they have to cut their target price to 606 rupees, and earnings estimate is decreased by 13% for FY24 and 11% for FY25. So clear cuts in EPS coming in by brokerages, as well as target price cuts as well post the numbers.
Right, thanks for that, Vinny. But do stand by, because Britannia is also expected to deliver a good set of numbers for the March quarter. What else is the street really expecting? Talk to us.
So absolutely, in terms of Britannia's numbers, we are expecting a growth of around 15% in terms of the revenues of the company. Profits expected to see a growth of 33%. Margins expansion of 200 basis points is what we're expecting. Volume growth expected at 4%. So obviously, when you see that, it'll be more of a pricing-led growth again for Britannia than a volume-led growth, because volumes is at around 4 to 5%. So pricing growth will be estimated around 10% is what it's coming in as. Obviously, in terms of the gross margins, we are seeing an expansion. Mainly palm oil prices have seen a correction coming in, and the company has taken price hikes as well. So obviously that will come down into the EBITDA margins as well, and obviously price hikes, premiumization is what the company has been focusing on. So that will be something that will be supporting the EBITDA margins of the company. Factors to watch out for: what is the volume growth outlook going forward? Commentary coming in on the rural markets. Other than that, what is the commentary on raw material costs, given that wheat sugar had seen an increase, but palm oil prices had seen a correction. So what is the current on-ground situation for the company? ICD commentaries, it will be important this quarter to watch out for, as well as new product and new categories that the company is looking at are key factors that we are keeping an eye out on from Britannia.
All right, thanks Vinny for that. So keep an eye out for all those factors when Britannia declares its numbers later today. But trouble continues to mount for Manappuram Finance as Enforcement Directorate freezes assets of the company's CEO. The ED conducted searches at 6 premises belonging to Manappuram Finance in Thrissur, which comes in Kerala. Searches were also conducted at premises linked to MD and CEO VP Nandakumar. Let's go across to my colleague Sameer Dikshit to get more details on this development.
Yes, definitely. That's the big development about Manappuram Finance Limited. The investigating agency Enforcement Directorate has carried out a search operation at 6 premises belonging to Manappuram Finance Limited, and this includes the premise of Managing Director Mr. VP Nandakumar as well. There has been some serious allegation that has been raised, and the foremost being that Manappuram Finance Limited has collected an amount of rupees 143 crore from the customers without following the RBI norms and the KYC norms. It has been mentioned by ED that after the objection of RBI, that how they have collected rupees 143 crore, and it was directed to them that this amount has to be given back to the customers from whom they have collected. But during the search operation, no enough evidence was found that the entire amount was given back to the customers. So there are evidences, there is concrete evidence that the ED has collected that this 143 crore has not been given back to customers. Moreover, it has been diverted by Mr. VP Nandakumar for purchasing assets or for the shares of Manappuram Finance Limited. And in the major action that has been taken by ED, the assets of VP Nandakumar amounting to rupees 143 crore that has been seized by ED. 8 bank accounts, some immovable property and shares have been seized by ED post the search operation. And this totals to rupees 143 crore. Not just this, the role of CFO and several other officials are being investigated by ED, that what is their active role in collection of this amount that was illegally collected. So ED mentions that they have got enough evidence, and this entire search operation was carried out at Thrissur in Kerala. So as of now, the investigation is going on, but it clearly shows that there are more troubled days for Manappuram Finance Limited.
Right, thanks for that, Samir. Let's quickly move on. Actually, we'll slip into a short break, but before that, I'm going to take you through all that we have lined up for you going forward. At 8:35, we have KK Mistry, who's the Vice Chairman and CEO at HDFC, and he's going to talk to us about results. Then we have Vikas Khemani at 9:20 a.m. He's the founder at Carnelian Capital Advisors. He's going to talk to us about markets and where he sees markets in terms of direction. Anand Goyanka then we have at 9:35 a.m. who's the Vice Chairman at CEAT on the back of earnings. We also have Veer Advani who is representing Blue Star at 9:45 a.m. and he's going to talk to us about earnings as well. We then have Baldev Prakash, who's the MD CEO at J&K Bank at 10:20 a.m. again on earnings. And lastly, we have Mohit Malhotra from Dabur India at 10:45 a.m. All of that in a power pack lineup on the market post 8 a.m.
Thanks for staying tuned to Market Cafe. Now, while the SGX Nifty is indicating a rather muted start today, we might still have some stocks to watch out for based on their earnings or on news flows. Lisa is here to tell us more about all these stocks that you should be watching out for. Hi Lisa, tell us more.
Yes, good morning. First, let's get started on the earnings. So, CEAT has reported a good set of numbers. The revenue that was up 11% on year-on-year basis, and even the PAT that stood at around 132 crore versus 25 crore. The EBITDA almost doubled to around 360 crore. Even the commentary that was also quite strong, because they said that the commodity cost that is expected to moderate going forward, and the volume exports product range as well as premiumization that is expected to drive the EV growth. Moving on to Tata Motors, the revenue was up 6% and even the EBITDA was up 38% on year-on-year basis. TVS Motors also reported good set of numbers. The revenue was up 19.5%, PAT was up 50%. That was driven by other income actually, because the other income that included 61 crore, that was a gain on the fair value investments held by the company. Now moving on to the non-earnings announcement, Godrej Properties, they purchased a land ad measuring around 27,000 square meters, and this is at Bandup, and this will be used for the development of a group housing project. Zydus Life Science, they have received final approval from US FDA, and this is to manufacture and market Sucra tablets, and this tablet had an annual sales of USD 84 million in the United States. And Indraprastha Gas Limited, they will be jointly exploring the potential business opportunities of green hydrogen, and for this they have signed an MOU with diversified renewable energy company ACME and also leading city distribution company, that is IGL. And lastly, on Manappuram Finance, ED has said that they have conducted searches under the PMLA provision at 6 premises of Manappuram Finance, and for that 143 crore of assets has been frozen after the search on Manappuram Finance. So these are the stocks that will be on investors' radar for today.
Right, Lisa, and let's also talk about United Breweries while we have you here. Weak set of numbers. What's the sense you get?
Yes, weak set of number and also weak commentary by United Breweries. So United Breweries will be in focus, and negative reaction is expected because the revenue that was up around 3.5%, and that was mainly led by moderate growth in volume, and volume growth was led by the premium category. But what was happening that the volume the moderation in volume growth was also on account of the high competition, and also there were some operating changes that happened in Tamil Nadu as well as Andhra Pradesh. EBITDA that saw a steep fall, while the EBITDA stood at around 54 crore versus 261 crore on year-on-year basis, and for that the margin contracted to around 3% from 15% last year. Well, the gross margin was at 38.6%, and this is at a multi-year low, and this is on the back of inflationary pressure in the barley as well as elevated glass prices. And this situation is not expected to improve anytime soon, because the management said that this inflationary pressure that is expected to continue on the cost. So do remember also one thing, that as per the SC order, UBBL, they had deposited an additional 75 crore in February. So that also impacted the numbers. Con call is expected at 4 p.m. today, and the key factors to watch out for would be the margin, the stable margin, the raw material trajectory going forward, and also whether the sharp steep in the EBITDA and the margin was that due to the high cost inventory. So these are the factors to watch out for, and UBBL will definitely will have a negative reaction today.
All right, thanks Lisa for all those details. Let's also see what brokerage house Investec is maintaining when it comes to this stock. And they've maintained a buy rating with a target of 1,661 rupees on the stock. And they say that the Tamil Nadu operating model has impacted sales and severe margin pressure continues to affect the company. They also say that the weak performance makes recovery harder for the stock.
Right, and another stock which has been under pressure of late, down 2.5% yesterday, was Aavas Financiers. They had a con call with regard to their earnings, of cost of management rejig also happening. And let's take a look at the key takeaways from that Aavas Financiers con call. Vamakshi is here, who's going to talk to us about that.
Well, yes, Aavas Financiers was under pressure today after it was announced that the MD of the company had resigned from his post, and in the con call itself, the company came ahead and clarified that he had stepped down due to personal reasons. Further, they also said that the promoters have not sold any shares since 2021 and have no plans to sell in the coming year as well. Now, apart from that, they also highlighted that Q4 was the first quarter completed under the new Aavas 3.0 framework, and in fact, for them, it was the strongest quarter ever. They have dispersed 1,581 crores in the fourth quarter, and this is an uptick of almost 23% coming in on a year-on-year basis, and this is in fact the highest quarterly disbursement for Aavas Financiers. They have guided for an AUM growth of anywhere between 20 to 25%, and they believe that in the steady state, spreads are expected to come at 5%. Operating ratios are expected to moderate ahead. Apart from that, they also believe that by FY25, home loans will account for almost 70% of the product mix. Now, during FY23, we did see the RBI hike its rate by around 250 basis points, and consequently, the Aavas also increased its prime lending rate by 160 basis points during the year. In fact, a further increase of 40 basis points is expected from May 5th, that is today. Apart from that, the management has also highlighted that Aavas is well placed to continue its industry-leading asset quality. So, those were largely the important takeaways that came in from Aavas Financiers.
All right, thanks Vamakshi for all those details on Aavas Financiers. But with that, we're completely out of time on this edition of Market Cafe. But don't go anywhere, First Rates takes all the action ahead.